Let's take a look a little bit at looking forward. I think some of the themes that will matter over the next 10 years that really make a difference to how you invest include three things: demographics, the debt issue, and deflation, as in not so much deflation is going to happen, but what if it did occur. So we wrote a newsletter a few years ago called 3D Investing about demographics, debt, and deflation, and I want to sort of use this as a theme for the comments I'd like to make tonight. So Rob alluded to this book, This Time It's Different, by Reinhardt and Rogoff, and the part I want to focus on is related to the debt, because we're going to focus on the debt part first. So there were 64 countries in the survey that they did that represented 90% of global GDP over a span of 200 years. So let's say that they covered a lot of territory. Only 17 countries out of the 66, we're talking sovereign nations now, didn't default on their debt in that 200-year time frame. And the ne'er-do-wells included France and Germany, China, Russia, all of Latin America, most of Africa, Japan, et cetera, et cetera, et cetera. A lot of countries. And we, interestingly, are among the default virgins, Canada, Australia, Singapore, and the US, that didn't default in that time frame. Now, the outcomes, as Rob said, are you can either inflate away your debt or you try to repay it, which is deflationary. Debt reduction is inherently a deflationary or disinflationary outcome. And the other thing that's realistic is this: there's a maximum amount of debt that even a sovereign nation can borrow, and we are very close in a whole raft of cases of different countries to that maximum. So this brings out a new normal. Some of the really well-known investment managers at PIMCO came up with this summary of what should we expect as we go forward. Number one, low interest rates. They expected a lower US dollar. That seems to have actually changed a bit recently. High unemployment and therefore low inflation. If you have high unemployment, it's pretty hard to push up wages and prices of goods and services. Very, very difficult, even if you print a lot of money. Expecting more government intervention. You're certainly seeing that today. Subpar investment returns, as if they haven't already been subpar for the last 10 years. And growth in the BRIC countries, Brazil, Russia, India, China, and their supplier nations, and of course Canada would be one of those nations. So if we take a look at how Canada is done, look at this chart on the right. It's about debt issues. The G20, so this is a large part of the Organization for Economic Cooperation and Development. Those countries have an average debt to GDP of 100% against 70% in Canada, and this year's deficit in those countries is almost a third higher, or 50% higher, I should say, than it is in Canada. So our numbers are looking pretty good, and as we go into some detail here on the debt, we actually have a pretty impressive record. Now, in terms of the entire G20, you can see that the developed countries, which are in the top, are increasing their debt, and that debt is moving into unsustainable territory. But the developed world, it may surprise you, because we think of, or the developing world, we think of so-called emerging market debt. It's high risk. You can't trust these guys. They'll never give you your money back. But their total debt to GDP is far less, by a huge amount. And furthermore, they can grow their way out of that debt because their growth rates are going to be high enough to accomplish that. So it's an interesting situation, but can you imagine a day when Brazil might have a better credit rating than the US? Not completely out of the realm of possibility. And a little while ago, we wrote a newsletter called If Pigs Could Fly. We were focused on the issue in Greece as part of the euro. The pigs refers to Portugal, Italy, Ireland, Greece, and Spain. These are the Southern European, or well, I guess Ireland isn't in Southern Europe, is it? And the debt issues, of course, that they're having. So we focused on Greece because it seems to be forefront. And there's a new movie coming up because there's been so much written about this now that they're now going to make a movie about it. It's going to be called My Big Fat Greek Debt. And this debt issue in Greece is really quite staggering. For starters, they're already at 110% of GDP on debt. Is that significant? Well, again, we're at 70%, and we think we have too much debt. Their annual deficit is more than twice what ours will be this year, including all of the provinces when we wrap it into this number. They have been in default 105 out of the last 200 years, so they are a serial defaulter. Why anybody lends money to Greece, I have no idea. You know, 1 year out of 2. But anyway, they do. And I say, just so you know, I'm not biased in any way about this. My father was Greek, so I sort of get the whole thing, especially the next couple of lines here we'll get to in a second. Government spending is already 50% of GDP. In Canada, it's only 38%. So the government's already taking a big chunk of the cash flow. They have a sales tax, which now will go up to 21%. We hate the sales tax we have, which is 12%, and theirs is already at 21%. 30% of the income in Greece is unreported. That's the part my father taught me about. And only 6 people in Greece declared income of over 1 million euros. I have no idea who owns all those ships that they got, those shipping companies. But obviously, it's not anybody who pays income tax. Which brings us to the latest financial oxymoron in the developed world, which is Greek taxpayer. It's not possible to find one. In Canada, on the other hand, we have actually seen a budget recently which has come up with a credible plan for deficit reduction, which actually sees the deficit reducing to 0. There is no other G7 country that's even attempting to get to 0 in this 4 or 5 year time frame. In addition, we've done it while keeping our corporate tax rates low and continuing to lower them so that we will now have the lowest tax rates for corporations anywhere in the G7 and about 15 percentage points below that of the US. I mean, this is a huge competitive advantage if we can tough this out and hang in there on that. And our debt to GDP peaked in the 90s, and of course, all credit to Paul Martin for having the tenacity to turn the corner on that. It was a liberal, interestingly, that accomplished this as opposed to a conservative. And that has allowed us the luxury of controlling the rate of our deficit. Now, to be fair, this doesn't include what the provinces owe. That's a whole other kettle of fish. So our Greece is actually Ontario, but we don't hold it against them. That's okay. We'll still go visit anyway.